everyone. Welcome to the Selling My Business podcast. This is your host, August. Today, my guest is Claudio Vilas. Claudio has over 25 years of experience as both an international executive for Fortune 500 companies, as well as an entrepreneur. He started his career when he was 18 years old. He founded an English teaching institute for executives called American Way in Argentina. At 26, he sold the institute to join Johnson & Johnson, where he spent 21 years in positions of growing responsibilities, such as marketing director for Latin America, overseeing sales of over 300 million, and domestic chan. I don't know. I think there was a misspelling on this, but anyways. So Claudio, give me a little bit more information of your background. I gave you kind of an overview of your background just now. Let me know a little bit more about why you became a business broker.
Okay, well, so thank you for having me in your podcast, August. It's really a pleasure being with you and discussing business brokerage, which is basically my true calling, if you will. So you asking me why I became a business broker? I think I was always a business broker. I just didn't know it. And I've always loved entrepreneurship. I love small business. I think the small business is the lifeblood of America or any other good society that drives forward, right? Mm-hmm. So business owners in the small business community, I don't think they have enough access to training like when you work with a large corporation. So I worked with J&J for 21 years, as you said. I did a lot of different things, and I was lucky enough to be trained in many aspects of the business. When you're a business owner and you've been your whole life a business owner, sometimes you don't have the access to all the other tools that you could have. And I think I can bring that to the table. So when I decided to leave J&J about 8 years ago and become an entrepreneur or become an entrepreneur again, because I was an entrepreneur before, I thought that, all these experiences that I had were good to help smaller business thrive and be, better. So within that, I became a SCORE volunteer. And I trained small businesses or people who are aspiring to create a business in all the aspects of entrepreneurship, from marketing to HR to finance to supply chain. Because I lived, at one time or another in my career, I lived in those shoes, if you will. So I helped them become a business owner or an entrepreneur, and I like to help at the end of the life of the business, if you will, exit and find the right buyer to take over your business. I don't believe that this is a transaction. I believe this is much more of a protection of a legacy. A business owner typically will spend most of his life building that business. And when you finish that life and you want to, retire or move somewhere else, you need to make sure that you work with somebody that will honor that legacy and that will help you make that transition. I work with the owners that, built small companies, 10, 20 people in the company. And sometimes those people have been there for, the life of the company. So when the business owner decides to leave, he not only thinks about how much money he's going to put in his pocket, but he typically thinks what's going to happen with the company, that baby that you created, those people that you trained, those people that are working with you, and they actually helped you build that company. Mm-hmm. So how do you take care of your family? So I believe a business brokerage is a way to honor the life of the people who actually make this country a great country.
Wow, awesome. That's amazing. Great. So let's talk about a little bit more meat potatoes of some advice that you can give business owners. Now, before we jumped on this, you talked about that you're very big numbers guy, data guy, analytical, and that you really try to make sure that the business is sellable before putting it on the market. So if you can break down what specific things you look at more specifically, I'd love to hear more.
Okay, well, so let's talk a little bit about, who the buyer of a business is, because that's where you got to start. A business is like any other service or product, something that you have to sell. So if you're going to sell something, you need to think from the eyes of the buyer and not from the eyes of the seller. The seller, of course, loves his business, of course, thinks that is the best thing, since sliced bread. But when you look at it from the buyer's point of view, they're going to find flaws to it. So what you need to do is you need to find those flaws before the buyer actually finds it and correct them, or if you can't correct them, at least explain why this is happening. Like I said before, many business owners are not aware of what a professional buyer looks for. And when I'm talking about professional buyers, I'm talking about private equities, family offices, investors that are looking to buy small business. So you have a discrepancy there between what the business owner knows or looks for and what the buyer looks for. Most business owners don't take any time in actually understanding the business financials. What they do is they have an accountant that will help them save taxes. And that's basically as far as you go in the business. Why? Because they're worried about, the day-to-day, the growing sales, keeping their inventory, talking with their clients, keeping their people motivated, but they're not really looking into the financials. And unfortunately, when a buyer comes to buy a business, they will look at the financials in a much more detail. So what happens is 90% of the time, the deals fall through. But when the deals fall through, they fall through in the due diligence phase. So I believe that just making a very, superficial analysis of the financials and put the business on the market, it really leads to a lot of waste of time of a lot of people, the seller to begin with, and the buyer, and of course us, the intermediaries. So I would rather, spend a lot more time doing a financial analysis of a business before I put it in front of any buyer, because the buyers, like I said, they're going to be looking with a magnifying glass, whatever issue that they can find, and especially if you find it during the due diligence, because what happens? You know what the process is. They make an offer, the seller accepts that offer for, let's say, $1 million, and then they go into the due diligence. When you go into the due diligence, the seller is already invested in the sell of the business. They've been there, they spent time, and they just want to get rid of it. Okay, so the buyer, if they find flaws at this point in the negotiation, it's for them a lot easier to lower the price and say, hey, you know what? I found this, and this. So now your business is not worth $1 million anymore. It's worth $800,000. And it's a very the due diligence process. If it's a good due diligence process, it actually is a very intensive process where the seller gets tired of it, and sometimes just because they're tired, it's like, okay, you know what? Yeah, just take it because I can't do it anymore. So I think it's a disservice to the seller not to do a pre-due diligence. And I do that, and I focus on that. So what do I do that's probably a little different? Rather than just asking you for the last 3 years of your tax returns, which is what most people do, I ask you for your general ledger. And I do an analysis as if I was an accountant of your general ledger in total. And I understand, what the different accounts do. And I make sure that, if it's a marketing expense, it's aligned to the marketing expenses and what have you. Because again, I don't want to waste my time. I don't want to waste my seller's time or my buyer's time. And I want to get the deal closed. That's what we do, right? So that's what I do that I think it's a little different. And it helps everybody throughout the process.
Yeah. One of the biggest statistics, and correct me if I'm wrong, Claudio, is that I hear that only 2 or 3 out of 10 businesses ever sell
Yes.
when they put on market. And it's probably a lot to do with stuff like this, where there's just like people want to sell a business, people want to buy businesses, but then when it comes down to the numbers, things just don't make sense, or they're just so disorganized, or at the end of the day, it's not the price that they originally thought they could sell for. So things get messy, and then transactions fall through. And is that what you see?
Yeah, that is correct. Most businesses never sell, and there's a bunch of reasons for that. And I think that's a really good opportunity for our industry to work with sellers way before they actually put the business on the market. Just think about this. When you buy a business, or anybody buys a business, and I said it a minute ago, they will ask for the last 3 years of financials. So if you put the business to sell today, well, you should have thought about it 3 years ago. So when they go and look back, they will actually, continue to go with the process. And unfortunately, again, most people don't use financial information for what it should be used, which is decision-making processes. They don't understand their inventories. They don't understand what a cash flow actually is. Cash flow, for example, is one word that everybody has a different meaning for it, because if you go to Biz by Sell, it says cash flow. Cash flow is not what Biz by Sell actually says it is. Cash flow is the flow of the cash from the time it enters your company until it goes out of the company, right? And until you use it. Now, that doesn't mean you're spending the money, because if you're using cash to buy machinery, well, that machinery is actually going to go into the balance sheet. It's not going into the expense. So a big issue that happens most of the time is, confusion between cash flow, net income, EBITDA, adjusted EBITDA, confusion between, what's an expense and what's an operating expense, what's a capital expense, which are two different things. And if you're a buyer, you need to analyze both. So all of these things that are typically not very well understood take you to missing the boat and not being able to sell the business, because when the buyer asks you for those things, you don't have an answer for them.
Now, how often do you see, Claudio, that after a buyer buys a business, they find out that there was something that was misleading in the books or something misleading with the company, where now there's some litigious action back to the original owner? Is that a thing that can happen often in a transaction?
Good question. I only had one situation when something like that happened. Most of the time, I don't see that. I don't see that there's a litigious situation. But that's just my example, my experience. I don't know other people.
Yeah, got it.
Mm-hmm.
So, is there any other advice that you can give a business owner around selling the business that is also kind of outside of the kind of general, 2 or 3 things that a broker sees on the usual basis?
Typically says, yes. I don't know if other brokers say this, but I think I love the book called The 7 Habits of the Highly Effective People. And the first habit that they say is start with the end in mind. I typically have a presentation for business owners that says basically, when it's the best time to think about selling your business, and that's the day you buy it. Okay. Why? Because not only because you eventually want to sell it, but because if you think about it that way, you actually can manage the business a lot better. You can, you can keep your records, your numbers in order, but you're also working on the marketing. You're also working on the organization and the SOPs, something that will make your business valuable for a buyer should make the business valuable for you. Because at the end of the day, what is the objective of owning a business? The number one objective, at least for me, is to create value. And how do you create value? Well, but having a business that runs by itself, that provides that brings a good net income, and that provides a good place to work for your employees. So, unfortunately, because of the day-to-day, craziness, many people forget that their job, a business owner's job, is to build a business that's valuable when you want to sell it. Okay, so that's what I would think. It's a good advice. Start with the end in mind. Every decision that you make should have an impact in the future value of your business. And if it doesn't have an impact in that future value of your business, the decision shouldn't even be thought of. I mean, why would you make decisions that are not going to impact the value of your business?
Yeah, got it. Awesome. So, Claudio, how can a business owner or somebody looking for more advice reach you?
Oh, well, I have a website, which is called cvbusinessbrokers.com. CV for Claudio Vilas, businessbroker.com. My email, claudio.vilas@sunbeltbusinessbrokers.com. I'm a broker with Sunbelt, by the way, or my cell phone, 954-774-4141. And I'd love to talk to business owners before they finally, put the business on the market, because there is a lot of work to do to put that business in tip-top shape so somebody will want to buy it and pay good money for it.
Yeah. Awesome. Well, great stuff, Claudio. We really appreciate the great advice. We appreciate anyone that's listened to this in its entirety. And if you need any help with selling your business, reach out to Claudio, and or you can reach out to us and we'll connect you with a local broker in your market. So thanks again, Claudio. Thanks for the great advice. Happy to have you on.
Thank you for having me. It's been a pleasure, and I look forward to continuing our relationship.